Welcome, my dear student, to our commercial subject group, level 3, account 212. Today we will cover chapter 1, the general journal for merchandise business with perpetual inventory system, and our lesson about the purchase merchandise. By the end of this lesson, students should be able to, firstly, identify the difference between service and merchandise companies. Secondly, describe the steps in determining inventory quantity. Thirdly, identify the item making up merchandise inventory. Fourthly, identify the cost of merchandise inventory. And fifthly, explain the recording of purchase under a perpetual inventory system without cash discount. And we will finally end with explain the recording of purchase under a perpetual inventory with cash discount. Let us start with identifying the difference between the service and the merchandise company. Firstly, what's the meaning of service business? It's a business that provides a service to the customer. Let us take an example for that. We have the accountant, law firm, and we have also the cleaning service. Secondly, the merchandising business. What's the meaning of the merchandising business? It's a business that sells goods to a customer. Also, it's known as the merchandise. For example of that, we have the retail, clothing, grocery stores, and the bookstores. These are the examples of the merchandise business. Shifting to the definition of the perpetual inventory system. Companies keep detailed record for the cost of each inventory purchased and sales. This record continuously or perpetually shows the inventory that should be on hand for every item. Companies that sell product with fixed price use this type of system, which is the perpetual inventory system. Let us take a look about the perpetual inventory system. The perpetual inventory system, it's also the double entry system, and it's constant of debit and credit side. On the debit side, we will cover three topics: the purchased goods, and it's called also the inventory. Second, the sales return of goods, and thirdly, the sales discount of goods. In the credit side, we will cover the sales goods, the purchase return of the goods, and it's also called inventory, and finally, the purchase discount goods, and also called inventory. Let us take a look about the recording investment in the general journal. By our example, we will see the investment, how it's recorded. On January 1st, 2020, Salman Company invests cash of 60,000 in the business. How can we record this transaction in our general journal? If I invest, so the capital will affect and it will be increased. And also I invest by cash, so the cash also will increase. When I come to record this transaction, I should write the date, and then my cash will increase and it will affect the debit side, and I will write the 60,000 in the debit side. Also my capital will increase and it will affect the credit side, and I will come to the credit side and write the 60,000. Moving to the purchase good for cash. On our example, Salman Company purchased merchandise from Raja. So, the Salman is the buyer and Raja is the seller. He purchased the goods of 8,000 for cash. If I purchase a goods, so my merchandise inventory will increase. And if I pay for this inventory, my cash will decrease, because that I will put the inventory on the debit side because it will increase, and the cash for my company will decrease, and I will decrease it on the credit side. Moving to the purchase return and allowance for goods for cash. In our example, also Salman Company received a refund from Raja. The amount of this refund is 350 BD. How can I write this transaction? If I received the money from the Raja, so the cash on my company will increase, and it will increase by 350 on the debit side. The cash increase because of the purchase return, so my inventory will decrease because that I bought it on the credit side and I mentioned with the figure of 350 on the credit side. Shifting to the purchase good on account without discount. In our example, Salman Company purchased a merchandise from Sultan with amount of 12,500 on account. On this purchase, I didn't pay cash for this purchase. I keep it on account. So my purchase, which is the merchandise inventory on my company, will increase because I purchased more inventory, but I didn't pay for this purchase. I keep it on account. So my liability also will increase. The inventory will increase and it will be affect the debit side with the 12,500, and my liability, which is the account payable, will increase also on the credit side with the amount of 12,500. Moving to the purchase return and allowance for good on account without discount also. For Salman Company, receive a refund from Sultan with amount of 500 for returns good on account. When I have the returns good that I purchased it before, but it's in account, so my liability will decrease. And I will put the figure on the debit side to decrease my liability, which is the account payable. Also, my inventory will decrease and it will affect the credit side with 500. Moving to the payment of net purchase to creditors without discount also. Salman Company paid the full amount due to Sultan Company. If I pay the amount it's due, so my liability, the account payable, will decrease, and also the cash will decrease because I pay the amount. For the accounts payable, if it decreases, it will affect the debit side with the 12,000, and the cash also will decrease and affect the credit side with 12,000. Okay, my dear student, from where I get the 12,000? Previously, I purchased the merchandise with amount of 12,500 and return the amount of 500. So the total amount due is the 12,000. Shifting to the purchase good on account with discount. Let us take this example. Salman Company purchased a merchandise from Iman with amount of 20,600 with a term of, with this term. Let us take more details for the term that I have it. The 2%, the cash discount that I will get it if I make the payment within 10 days. If I make the payment after finishing the 10 days until 30 days, I should pay the full amount without any discount. So, in our example, firstly, I purchase a merchandise with amount of 20,600. Let us write the purchase transaction. If I purchase a merchandise, so the inventory for me will increase, and also by this term I know that I didn't pay the amount of this purchase. So the purchase will be on account. So my liability will increase with account payable, and it will be 20,600 affected on the credit side. Shifting to the purchase return and allowance of good on account with discount. In our example, Salman Company received a refund from Iman with amount of 600. How can I write this refund? And the refund was on account. If I received the refund, so my liability will decrease with